All right. Back in the action here once again. It's about that time of day again here, folks. It's Monday evening. It's May the 6th, 2019. It feels great to be back here with you all after a short break from the markets last week. Hope you guys had a great weekend. We're back in the action, though. Back in the saddle. You know, we all know there's life-changing opportunities every day in the financial markets. The problem is the markets aren't always very easy. And my job tonight on this video newsletter, we're going to grab oil, S&P, Nasdaq, gold, and euro. My job tonight is to help you go get some of that life-changing income in tomorrow. That's Tuesday's trading session. And we're going to break this plan down tonight. We got oil, S&P, Nasdaq, gold, and euro. I'm going to jump in here on oil tonight because, as you probably noticed, a lot of gaps down, a lot of big moves overnight. Well, oil got their gap filled, but now that gap is looking like a great level of support for tomorrow's trading session. Let's grab that oil market first because, as you can see here, oil is obviously a bull market running higher here. But the problem is we've got two legs up, and you'll notice it looks like we're sitting right around what should be a key milestone, a key level of resistance for those bullish trend followers. Now, I don't want to buy up here, right? A little too high to be buying here, so I want to find a level of support that I can be a buyer at for tomorrow. And I got a couple things I'm watching for. One is a hidden channel. Marking up this channel, want to buy off that low, but look closely here though, that big gap down, right? Big gap down, they filled that gap, but now look, now that gap lines up beautifully with a reversal line, low of that channel. Guys, I'm looking for a buying opportunity right now here on the euro. I've got on the crude oil, I have a relatively deep pullback, and with that deep pullback, I'm looking for ultimately three different setups on that pullback. I'm also going to talk about tonight if the market reverses. We'll put a plan together for that tonight. And of course, we'll also talk about if this market keeps on going. We have one more target waiting up top there around 63.77. And we'll talk about the best ways to trade that break higher. So that gap on crude oil is looking like a fantastic target for us on the pullback. All we need now is to plan the entry pattern. We're going to grab that in a lot more detail here tonight on the video newsletter. Then, of course, over on the E-minis, E-mini S&P, and, of course, into that Nasdaq here tonight. Pretty sharp pullback, right? As you can see here on the S&P, had that big gap down. We'll talk more about what led to that gap and how to trade it a little bit later on in this afternoon's video. But the most important thing is, though, is they got the gap down, right? They tried to made a very valiant effort here to fill that gap. Gaps are not always filled, boys and girls, right? We'll talk about that in more detail here tonight. So the market is obviously bullish as we're going higher here, but don't tell that to the buyers. You can definitely tell the buyers who are in this market get a little bit jittery into the closing bell because you can easily see they dumped whatever positions they had right into the close today. This results in a sharp pullback. Now, sharp pullbacks are really, really difficult to trade because, one, they force you to make split-second decisions. Two, they allow now momentum to turn, right? But three, if you can anticipate now that momentum turning, you can also look for momentum to fail that turn and what could be a very, very aggressive move going back up. So sharp pullbacks are really difficult for a new trader because they kind of shake things up, right? They force you to make some bad decisions or some very fast-paced decisions. They oftentimes lead to a kind of top-heavy market that will collapse all the way down. We're going to plan on how to trade that move lower in just a moment, but we can't get too aggressive on this because that might just be a deep pullback, right? How would we know if we can trade that thing going back up again? We're going to talk about that as well. So we'll talk about the bull side, the bear side, because I know that gap wants to be filled on the S&P eventually, but how we get there, this sharp pullback is going to make our job a little bit more difficult. We're going to dive into the S&P and talk about that sharp pullback. Speaking of sharp pullback, right? Big sharp pullback here on the Nasdaq. Nasdaq opened up, big gap down right over the weekend, right? They collapsed. They seem to find a way out of that hole, but you'll notice they came all the way up, kind of gave that little high a kiss here, right? And then again, you can tell that whatever buyers were in the market today, they definitely weren't trying to hold their positions into the overnight. You can definitely tell they're expecting to hear something from China most likely in the overnight. So are we, obviously, right? But the bottom line, though, is you can see this, what I would assume to be profit taking into the closing bell. It's a very sharp pullback. Will that sharp pullback, will we buy this market going back up to retest the high? Or will we collapse back down to that low? Will we get stuck inside of a trading range here? And how do we trade a range-bound market? I've got bullish, I've got bearish, and I've got sideways, different scenarios to run through tonight on that Nasdaq, because the bears, they want to get down to retest that low. The bulls, though, they want to get back up to retest the high. The short-term momentum doesn't look very good for the bulls right now, and we're going to break this down into bullish, bearish, and sideways scenarios here for you guys tomorrow on the NQ. And then over on the yellow metal, the gold and the euro tonight, these are both range-bound markets. Gold, as you can see, is a strong bullish move. This, of course, was on Friday, and then into a trading range right after that non-farm payroll number came out on Friday morning into Friday afternoon. This is a bull market. Bull market into a trading range. Trading range tells me I want to buy low, I want to sell high. So I do want to buy because of that bullishness right now, right? But I've got really one big clue, and that has a lot to do with the amount of the move above the range, the amount of the move below the range. I've got a great option here now around that 1277, 1276 area. That's where I'd like to buy. I'm looking for two distinct entry patterns to buy off of that low. I also need to be aware of what if the market tries to go through these highs, right? Could I sell off the high? Is that an option? Do I have to be a buyer? Yeah, I could definitely sell off that high. We'll talk about the entry patterns I want to use to sell off that high. But at the same time, though, how could we try to breakout, right? What would a breakout look like, and where would some targets be, right, up overhead? We're going to plan all of this tonight on the yellow metal here, on the gold. And then, of course, how can we forget about that euro? Euro also, very much like the gold here, has a bullish move into a trading range. Right? Trading ranges, of course, tell us to buy low, sell high, and avoid the middle. My biggest focus right now, though, is buying down below that low. I've got two distinct entry patterns I'm looking for to buy off of that low. What if it goes higher? Can I sell it back down? I can, but I need to see a very specific pattern for that. And then, of course, right, last but not least, right, how do we break higher here? Because if we do see that breakout, heads up, though, we got that measured move right ahead of that big round number. So we got to be careful trading breakouts. I want to buy the pullback, but I've got to be ready for everything. So we'll put that plan either tonight, right, on the euro as well. So we have everything ready to rock and roll. I got a range-bound market on the euro and gold. Sharp pullbacks on the S&P and the Nasdaq, and of course over on the oil, right? Oil filled the gap, the only one of these markets filling the gap, and now we're getting a chance to use that gap here, right, to really formulate a good plan here for tomorrow. Now, before we jump into those charts and put the whole strategy together for Tuesday's session, I want to remind you, make sure you never miss another great video newsletter. Make sure you're always the first person to watch these videos every evening by joining our mailing list. Just before I publish these videos on our YouTube channel, I send out an email to our entire list. That way you have the best opportunity to grab this information and run with it every evening. If you want to join the mailing list, make sure you never miss another video. It's very, very easy. All I need is your name, your email address, and then hit that subscribe now button on the right-hand side. And wait, don't forget, when you subscribe to our list, make sure you check your email inbox I'm going to send you a verification email, and I'm also going to send you a welcome email with a bunch of goodies so we can get the most out of our time working together every evening. So when you subscribe to the list, make sure you check your email, check your inbox, check your spam folders, check your promotions tab in Gmail, right? Make sure you find that email because sometimes it will get kind of hidden in the promotions folder or inside the spam folder if you're on some of those free email services. So make sure you never miss another great video. Join the mailing list, and again, check your email so I can send you that welcome email. Also, don't forget, right below the video tonight, in the comments section here, I need your help. I'm always trying to improve this video newsletter. I want to know what's your favorite part, what's your least favorite part, what's your favorite market. Do you just scan all the way through to your favorite market, or do you watch the entire thing? I would love to know how you use the newsletter. Are you trading the Asian session, London session, US session? Are you trading all of them? What, in your opinion, is the most effective part of this newsletter? What do you hate the most about it? What would you like to see me cut out of this newsletter? Drop me some feedback in the comments section below. It means the world to me that you guys would speak up and give me some honest feedback because I want to always make this video newsletter better and better every day on our trading blog. And then while you're down there in the comments section, if you love the video, if you watch every evening, give me a thumbs up, will you? That goes a long way to help me expose this video to other traders here on YouTube. So that will mean the world to me. If you take a few minutes of your time here this evening, give me some feedback. What do you love? What do you hate? What would you change? And then don't forget, right? Subscribe to our YouTube channel. Hit that thumbs up button. That means the world to me. Thank you so much. And don't forget, if you have any questions, right, the comments section is a great place for questions, but I'm always here. I'm old school. I know. You call that phone number. I actually talk on the phone. I know. No texting, no spamming, right? Just, call that toll-free phone number. I'll pick up the phone, answer all the questions, whether it be charts, data, brokers, markets, membership, trial, whatever the questions may be. Don't be afraid to pick up that phone, call that toll-free phone number, or use that live support tool in the upper right-hand corner. All right, enough chit-chat here. Let's get this party rolling. Took a little bit of break last week. Hope you guys enjoyed the time off last week here. Hope you enjoyed the weekend. Boy, beautiful weather all around the country here, at least in the northern hemisphere, right, of the United States here this weekend. We're back in the action now. We have a relatively cool, calm, and collected week ahead of us. If you recall last week, right, we got peppered last week between the FOMC and the non-farm payrolls and the earnings reports, right? I mean, shoot. A little bit beat up after last week, right? Last week left me with a couple bumps and bruises. I'm still trying to work those knots out of my back. The bottom line, though, is now we got week number 2, right, of this month of May, right? Very short week, obviously, last week. Just 3 days, right? This will be the first full week of the month of May. The second week of the month is usually going to be characterized by a lot less news events coming out, right? You'll notice there was no major news today. There really isn't much on the calendar for tomorrow. On Wednesday, we got that petroleum status report, the weekly inventory report. On Thursday, we'll hear from Jerome Powell. And of course, we got CPIs, which, if I had to guess, I would say probably going to be the big news of the week on Friday, right? All the way at the end of this week here this week. So not a lot on the calendar, right? A very sharp contrast to that neck-breaking, right, type of environment we saw yesterday or last week, right, with the markets all over the place with non-farms and FOMC and earnings reports everywhere last week. So a very welcome break from the chaos. But at the same time, though, with all that news comes great volatility, and with the volatility comes great trading opportunities. Had a great week last week. Expect to have another great week here with you guys right on this video newsletter. No major news for tomorrow, as you can see. Right? There's nothing scheduled really tomorrow. Yeah, Jolt's report at 10 o'clock, but I don't think that's going to be the big market moving event for tomorrow. I would assume tomorrow we're going to continue to hear more about this U.S. and China trade talks, because keep in mind, later on this week, we still have, according to news headlines and according to the news wires this afternoon, they have not canceled the U.S.-China trade talks in Washington. So we are back in Washington. Remember, every week they go back and forth from Beijing to Washington, D.C. to Beijing swing right back and forth here. So they're back to the White House this week, back to Capitol Hill. Who knows, right? Who knows what we're going to hear? Everyone thought everything was going great until Sunday night, right? And Trump took to Twitter, right, to beat up on the trade talk. So we may see a very cold continuation to this tomorrow. We may also see, right, a very sharp rebound and go back to retest those highs here tomorrow. So very much up in the air right now. And whenever we're up in the air like this, we always know tomorrow morning we'll come out, we'll prep our charts, we'll do our job, right, and we'll see what the market gives us. So no major news tomorrow, right? U.S. trade talks, China trade talks, push back to later on this week. Most of the news is going to be later on this week as well. So we are really left looking at the charts here tonight, using what we have to work with to formulate our plan for tomorrow. We got crude, S&P, Nasdaq, gold, and euro. I'm going to start off here first on the oil market because like most of these markets, we woke up this morning, or maybe you woke up last night if you're in Europe or Asia, right? Woke up on Monday morning and we see this big gap down. Now, of course, we know that anytime we see a market open up with a gap, most of the time that gap gets filled. The problem is there's no timeline for it, right? There's no telling when that gap will get filled or how it will get filled. So my best advice to a new trader is don't get too wrapped up in using gaps. If we can get them filled, we get them filled. Usually they do get them filled, but a good example would be a strong move down right here. You don't just automatically want to start buying this market when you see a strong gap down, because there's no guarantee that that gap's going to get filled as quickly as it did today. You saw a good example on the E-minis, right? They didn't fill their gap, at least not yet. So remember, just keep it in mind, a lot of traders, they get wrapped up in this statistic that 80% of all gaps get filled. But the problem is there's no telling when, right, or how it gets filled. I mean, we see lots of times. In fact, I recall the last time we saw a big gap down, it took weeks to fill that gap. So, don't be naive, right? Just because, most gaps do get filled, it doesn't tell you when or how or where it's going to be getting in, right, to get it filled. So it's very difficult to use gaps the way that most rookie traders kind of fantasize, right, about using them. Now, once you saw that strong move higher, right? Once you saw that strong move higher going into the 8 o'clock hour here in the U.S., that's when you pretty much knew, right? You're probably going to get that pullback, that failure, right? And that retest of that gap. So again, most gaps do get filled, but don't assume that, there's a gap down, so I've got to be a buyer, because you'll usually lose quite a bit of money doing that. Today was pretty easy on crude, but again, don't be naive. Don't assume it's always going to get that gap filled for you that same day, because the last time we saw this, it didn't happen. The bottom line is we saw an obvious, right, 1, 2, 3 reversal. We know this market is bullish once we saw that rebound off of these lows. And of course, once we know the market's bullish, we then start looking for buying opportunities off support. So we know we have a support line, or we know we have a bull market. We want to find a level of support. In my eyes, the most reliable levels of support in trending markets are going to be using channels. I know I don't want to buy right now because I can easily see I've got one leg, 2 legs, and we're right up around that key level of resistance. So I don't want to buy now. I want to buy a pullback, right? I want to buy low is what I really want here right now. And I want to find a level of support that I can use, right, to incorporate with an entry pattern, some reliable entry pattern. Now, where can I find levels of support? Well, first of all, I can connect these highs. And if I can connect those highs, I can bring it down, and boy, does that fit like a glove, right, off of those lows. Now, I know what you're thinking right now. Joe, this isn't a very good-looking channel, right? Why aren't you drawing it like this, right? Isn't this what, don't most people draw channels like that? Or, isn't that your channel right there? No. I completely agree. This is a little bit different technique that I like to use, which is called a hidden channel. So to find a level of support down here, what I'll actually do is I'll start by looking for a resistance trend line first, right? It's true, right? To find a great level of support, I always like to start by finding a level of resistance. I find that level of resistance, I bring it down off that low, and yeah, I won't argue, it's definitely not something you're going to learn in a textbook about drawing channels, but I find that in my experience, these channels, these kind of hidden channels, they really make for an excellent level of support. So now that I've got that level of support, what else could I use here? How about a reversal line, right? Anytime we go up, we pull back, we go up, oftentimes that level can be used as a level of support. So here we are, we go up, we pull back, we go higher. I'm going to use that level right around that 93 area because now that can be used as a level of support, right? So in other words, this prior resistance area right here, what was former resistance can now be used as that key level of support, right? So I want to buy off that support level on that pullback. And then as I mentioned earlier, that gap down, they go back up, they fill the gap, and you'll be amazed at how much those gaps can be used. Again, we can't just blindly buy the market or sell the market trying to get that gap fill. What we can do, though, is we can not only use it as a target on the way up, but I can also now use that gap now, right, as a support level, right, on the flip side. So now you'll notice we've got the low of that channel, right? We got that reversal line. We got that gap fill level, right? This whole area right here looks beautiful now, right, to buy that pullback. So I want to buy a pullback down inside of that, what I call the battle zone. Let's talk about, right, what type of entry patterns you might be able to use on that, because you know, if we do get that pullback, it'll be a relatively deep pullback, right? So if we get that really deep pullback here, that'll be a pretty sharp pullback. What's the best way to trade a real deep pullback? Well, most of the time, when you see a real deep pullback, there'll usually be two legs to it. So what you want to do is you want to draw a trend line down over, right, that second leg, right? So one leg, two leg. We call these two-legged pullbacks. Now that two-legged pullback pattern allows me now to use that trend line as a level of support, right? So we call these two-legged pullback setups, or 2LP is the nickname that I use on the newsletter for this. And of course, we teach this stuff and trade this stuff in our trade room. But anytime I see a relatively deep pullback, again, I know this area is where I'm looking. I just need to get some sort of entry signal once I get there, right? So watch for that 1, 2, draw that trend line down, and then use that trend line, right, up and over for that two-legged pullback. Now, if we don't get that two-legged pullback, if we get just a strong pullback, much like we saw back here, right, much like we saw back here, look what happened back there. The market pulls back below the moving average. The bears try to sell the pullback, and what happens, right? They fail. See what happens, right? For example, right here, right? They pull back below the moving average. What happens? The bears, they try to sell off that pullback. It's not a bear market, it's a bull market. But if you're a rookie and you don't know any better, oftentimes those short-term time frames, they make it feel like the market's reversed. They haven't reversed. It's a pullback. And so when I see those sellers trying to sell that pullback, I know I can buy right into their stops. So now imagine now, right, we get that nice strong pullback, right? Now the short-term sellers in the market, they think this thing is bearish now, right? Or maybe they're looking at that gap at 86 going, see, I told you, sell back to the gap, right? Whatever the case may be, most of the time when we see a real strong pullback like this, you're going to see sellers try to follow it up by selling off that moving average. That's exactly what I'm hoping for, because then I know exactly where their stops are, right? Or if you watch my newsletter every evening, right, you know where the pain comes in, right? At what point now will those sellers start to feel some pain? Well, if they're selling that pullback, once this thing jumps back higher here, oh yeah, they're in a lot of pain right now, and we call those failure setups, right? Failure setups. Again, it makes sense, right? Market pulls back. The bears say, look, we're going lower. What do? They try to sell off that pullback, right? Meanwhile, we know where their stops are. And if I see this trade short start to fail, again, I'm not selling it short, but the bears will. Now we look for that failure. And don't forget that failure pattern almost always then pulls back for the pullback pattern that follows, right? So failure into pullback, failure into pullback. So now we've talked about three distinct patterns here, right? I've got the two-legged pullback, right? Which means you're going to use that trend line on the opposite side, or it's a pullback. They try to sell it off. We buy into their failure. And again, moving average comes over, right? And I can buy that pullback off the low. Perfect. Now, what if we don't get the pullback? Or what if we just sit back inside what could be a range here? Then what do? Right? What if this market pulls back, but we don't really get the deep pullback that we were kind of expecting, right? What if it pulls back, kind of bounces off that low? What if it gets stuck inside this range just ahead of that measured move? Well, remember, I don't want to buy into this high, right? I don't want to buy into that 73. What I want to do is I want to buy below the low of the range. What's the best pattern to buy below the range? It's called a two-try failure. One try outside the range, pull back, two tries. Make sure those sellers try once, make them try twice. Once we see those bears try once, try twice, then we're looking to buy, going right back up into that trading range. We call these two-try failure patterns, right? If it doesn't pull back for us, it's not going higher either. It's going sideways. If it starts going sideways here, now you know, wait for that, right? Wait for that two-legged pullback or wait for that two-try failure pattern right from there. Now, what else can we do here, right? Can we get long if the market goes higher here? I've got one leg. I've got two legs. I've got three legs. So what if the market wants to go higher? Right? What if it wants to go higher? Boy, there's a lot of potential trouble you can get into if this market runs because you don't want to buy into that next milestone, right? You saw what happened here earlier. They got to their measured move and what happened, right? It pulled all the way back. Okay, so you don't want to go chasing after it as it goes. Here are two patterns, right, to keep in mind here as we try to go higher. Both of them require a relatively strong break higher. The first one is the two-try breakout. We jump up, very strong push higher. Bears try once, bears try twice, and we're buying. This is before, obviously, we get to that measured move. Now, if this really jumps and you get really close to that measured move, what you want to wait for now is a trap on that second try, right? So 1, 2, trap, and then go, right? So look for the trap pattern if it gets too close to, right, that measured move, right, that trap pattern. If it just jumps, we got 1, we got 2, we can buy that, right? Bears try once, bears try twice, and we're buying literally right into that failure, okay? If it does jump, though, if it really jumps and you're seeing that measured move right overhead, now you want to think traps. 1, 2, now it's imperative, though, that you get that trap because you don't want to be trading right into, right, that measured move. So that's the first one. It's called a two-try breakout pattern, right? The next one's going to be a 1, 2, 3 breakout. Mark up that high, mark up that low. That becomes your new channel, and now we're buying off the low of that channel. It's very similar, but it won't be as dramatic, right? The breakout pattern is the strong move up and then 1, 2, literally right on top of each other. Okay, almost look like this, right? Where it breaks out, it goes 1, 2, right? Gone. So just wait for that to try. Or does it go up, back, and go? Then mark up that high, bring it down to that low, and that becomes our new sweet spot, right around the low of that, right, of that channel. Where's your target? Your target, of course, now is up to that measured move. So now we have everything we need here for the buy side on crude oil. What about the sell side? What's the first thing we need to be a seller? what's called a 1, 2, 3 reversal. In other words, I want to see 1, strong move down, right? 2, pull back to the moving average, and 3, I want to see a strong move off the moving average. We call these 1, 2, 3 reversals. Now, you don't want to try to predict that pullback here. You don't want to try to sell that pullback, because most of the time that pullback will fail and will end up running back up to retest the high. We talked about that plan already, right? So instead of trying to sell that pullback, I'll wait for the follow through, then mark up that low, mark up this low, up to that high to find that hidden channel, and then we're going to sell that sweet spot, right in where that original low lines up at the top of that channel. That's where I'm looking to sell this market tomorrow as we get that run back down to retest that $60 a barrel. So if it does turn bearish, I'm not afraid of being a seller, but I'm not going to sell a bull market. Only time will tell. And don't forget, tomorrow morning, we'll be together tomorrow in our trade room, 8 o'clock Eastern time, right? And we'll do it all together. So tonight, I'm going to go over all the setups, all the patterns I'm looking for, right? But then we'll do it together tomorrow, right, in our trade room. Which reminds me, right? I got to keep going tonight. I want to keep giving you guys the rest of the strategy for tomorrow. But if you want to see a deeper dive into everything that we do, stuff we're going to use tomorrow morning in our trade room, I've got a great free trading class for you, especially if you're a new trader trying to learn all the best skills, or if you're an experienced trader that hasn't quite been able to unlock becoming consistently profitable. Grab that free course. I'll put a big red button right below the video tonight on our blog, or it's all linked up in the upper right-hand corner. I'll teach you all my favorite entry patterns. I'll teach you all about the 3-step strategy, and also part of our free trading course, you'll get a daily chart lesson of all the setups that we saw, all the great things we saw that day, right, in our trade room. It's a great, great opportunity. Even if you're not a client of mine right now and you want to get a deeper dive into everything we do in our trade room, grab that free course. It's linked up in the upper right-hand corner, because I want to give you guys as much as I can here, but unfortunately I don't have the time to dive that deep into everything right now, or else we'll be here, right, all evening here tonight. Now, over on the S&P right now, so a very good example here, another gap down, right? We saw that gap, right, from the, this of course is Friday afternoon's close, right? That's Friday's close. And then of course, this is Sunday's open, right? Big gap down. The buyers obviously took control of this market here today, but you can definitely see those buyers were a little bit skittish on this. You can definitely see the buyers weren't too comfortable going to sleep tonight with a pocket full of open positions, right? You can definitely tell that traders are still a little bit rattled here right now from the, again, over the weekend headlines. And it probably, right, waiting to see what this market's going to do here once they open up in Asia in about 15-20 minutes as well. So as of right now, we definitely do have bullish momentum on the chart, but here's the problem, right? That is a very strong pullback. And one of the rules we always talk about is anytime we see a strong move in one direction, what do we usually get? We usually get a second leg. So the most important thing about this market right now is just to remember that very simple rule. Anytime you see a strong move in one direction, you've almost got a guaranteed second leg. And if it doesn't get a second leg, it's going to really squirm and try its best to get that second leg. For example, right, we had that strong move down, going to get that second leg. Right? We then turn back higher, right? Going to get that second leg. Now, strong move down, probably going to get that second leg. So we know that sellers, even if they're not successful at getting that second leg, they're going to give it, well, the old college try, right? They're going to really put their weight into it and try to get this market back down to retest that low. So my big problem is we have a great spot right now to buy low, right? It's a great spot to buy low. The problem is, though, is that this momentum is way too strong, right, to be a buyer right now. See, when I have a bullish momentum like we saw back here, right, I can buy these little pullbacks, right? Market goes up, I can wait for the sellers to sell it, right? And I can buy into their failure. This is the exact same failure pattern that we talked about a few moments ago, right? There on oil, right? Bull market, we pull back, the bears try to sell that pullback, they fail, and the market runs higher. That is a very different environment though we're seeing right now. So I know the buyers want to go back and retest the high. The sellers though, they've got a good shot here right now to retest that low. So what are some options here for us? First of all, what do I need to be a buyer on this? In order to be a buyer on this, we have to first respect the momentum of these bears. Again, anytime we see a strong move in one direction, we're going to probably see a second leg. Okay, not a guaranteed second leg, but probably a second leg. Nothing is ever guaranteed in these financial markets, especially when you can easily tell they were taking their profit just before the closing bell. I don't think people were actually selling this. I think buyers just simply couldn't stomach the idea of going to bed tonight with open long positions, right? Because they just don't know what China is going to do, right? I don't believe we've heard, besides confirming they're still on for the meetings this week, we haven't heard much as far as any retaliation. And I'm sure a lot of folks were weary of that, which is why they hit the exit button right when the closing bell was ringing. So we know now this is probably just buyers liquidating their long positions. Right? I need to now wait and see, do the sellers actually pick this up and run with it? Right? How many tries do you think the sellers are going to get before they call this thing bearish or give up on this? Right? It's a very strong move down. It's not a bear market though. So for all I know, the bears could try once, the bears could try twice, and this market could easily go rally right back higher. In fact, that's exactly what my plan is for tomorrow. I know that this move down is probably going to see a lot of people trying to come in and sell off that moving average. And I would imagine if they try once and fail, you'll probably see a second round of sellers trying a second time, right? I want to let those bears try twice. Right? That much momentum going lower, the odds are pretty good they're going to get that second leg. So although I do want to buy this market, I'm going to stay patient, wait for those sellers to try a couple times, twice to be specific. And then once I see those bears trying once, trying twice, now I'm going to look for that run back up to retest that high. Now from here, right, what about how do the bears take control? Wait a second. Why am I not trying to sell this thing right now? I'm not trying to sell it because it's not a bear market yet. What does a bull market need to do to turn bearish? 1, 2, 3 reversal, right? Strong move down, pull back to the moving average. They got to hold that pullback or at least, right, give us that second leg. If they can give me that second leg, well, fine. Now we know it's bearish. Now I'll mark up that low. I'll mark up that low up to that high now, which almost looks like it's already there waiting for us now. And then now I've got that sweet spot waiting right above these highs here, right? And I can look for that entry off that high. And that entry, by the way, if you were to zoom in on that on that entry location, it will probably be one of those failure patterns, right? The buyers go up, the buyers try to buy the pullback, they fail, right? And we can then sell into that failure on the way back down, right? So now imagine that area right there, right? Imagine that pattern, right? So what we do, right? Price goes up, the buyers try to buy the pullback, they fail, and we're selling into that failure. Again, don't forget these failure patterns, pullback patterns, trap patterns. You can learn all about these patterns in that great free trading class that we talked about earlier. So really at this point, it's kind of a wait and see. On the pullback, I'm waiting for a 1, I'm waiting for a 2, and to buy back up. Nice, juicy target, waiting back up to retest the high. I like that target because it gives me a small risk with a large amount of reward, Okay, or do we see this continue with a 1, 2, 3 reversal? Mark up that low, mark up that channel low, bring it up to that high now. Again, I realize this is a little bit different than you would read in most trading books, right? But I'm not teaching what's in most trading books. I'm teaching what's working in today's markets, right? Then we want to buy that or sell that pullback now up around the high of that channel. And again, if you want a much deeper dive into all the entry patterns that I would use to get into that, right, grab that free course below the video tonight on the blog, or right, that link in the upper right hand corner here. The only other scenario that I want to be ready for tomorrow is if the market sits here and goes sideways, right? So if we sit here and go sideways tomorrow, right? If we sit here and go sideways for an extended period of time tomorrow, now this becomes a range, and we can basically use that 2-try failure pattern, 1 try, 2 try to sell off the high, right? Or below, 1 try, 2 try to buy off of that low. So if we do end up just kind of sitting here going sideways tomorrow inside of a range, just wait for the breakout. Let the bears try once, let the bears try twice, and we'll buy it back up. Remember, the market at that point isn't a bear market. It's a range at that point with a bear bias to it. We'll buy below that range using that 2-try failure pattern. Or, right, big strong move down into a trading range. Let the buyers sort of break it out. Let the pullback buyers try it, and we'll sell it back down into that range from there. So we may see the market go sideways tomorrow. If it does go sideways tomorrow, we will be ready for that as well. So at this point now, it's just a matter of time before we get the opening bell in Asia, and we see what we get on these E-minis. Now, last but not least here for the E-minis, the Nasdaq. The Nasdaq and the S&P were very, very similar. Nasdaq got their gap fill and of course tumbled off it. The S&P made a valiant effort to get the gap fill, Nasdaq got above its high today and dumped. S&P got a little bit more ground made up before it dumped off this high. I assume this is all because of the fear of holding an open position right into the closing bell here today and having to stomach the idea overnight. Not a lot changes here right now, right? Not a lot changes. It's an overall bull market, a very sharp pullback. That sharp pullback tells me we should probably see another leg. The sellers want to go back down and retest these lows around 76.70. The buyers want to get back up and retest that high. And of course, from there, they want to get that big gap fill. Remember, gaps aren't guaranteed to get filled right away. Yes, they do usually get filled, but not on our time frame, right? They usually make us wait for them a little bit longer than we'd like to. So now we can see here, same basic plan, right? Same basic plan. We saw a beautiful, as you can see here, right? 1, 2, 3 reversal off of that low. Mark up those highs, right? Down to that low, and you can see that beautiful failure pattern, right? For those buyers. Bears pull back, bears try to sell, right? And of course, those sellers get stopped out and everybody runs higher. That's the type of pattern I look for when I have a relatively deep pullback. Not this pullback, right? This is one hell of a pullback, a very sharp pullback. So knowing that this is so strong, again, much like the S&P, I know my target's back overhead. I'm going to give those bears 1 attempt. I'm going to give them 2 attempts, and then we'll buy into their failure. Once I see the bears try once, I see them try twice. Okay, notice how I draw this too, guys, right? Higher highs here, higher highs, right? I'm not trying to do this with lower highs. Okay, you always want to see that higher high, right? They go down, the bears try once. The bears are going to be trying again at a higher price, right? Sellers always want to sell high. We wait, let them try a second time, and then I can buy right into those stops. Because remember, the aggressive sellers will try first. If they're unsuccessful at going lower, the conservative sellers will then try right after those aggressive sellers. At that point now, everybody's in, right? The rookies are in, the experienced traders are in. Okay, the conservative traders are in, the aggressive traders are in, and then once I see them fail, I can buy right into their failure, right? I call this, by the way, It's called a failure pattern, but it's a special type of failure pattern. It's called a nested, right? Called a nested failure pattern. In other words, we wait for them to sell inside of that pullback, right? That's where the term nested comes from. The bottom line is you'll learn a lot more about these nested patterns inside the free trading course that I mentioned earlier. At the same time here, right, if we can't get that rally higher, 1, 2, 3, make sure that third move is very strong. Mark up that low, mark up that low, up to that high. Now we know where our sweet spot is, and now we can sell off that high. And again, imagine now, right, as part of that kind of pullback area, we go up. The buyers try to buy the pullback to the moving average, right? They fail. We're selling into their failure, right? And we're grabbing the pullback for the move back down again. So kind of imagine now, right, if that was right there, right? Buyers go up to the high of that, right? To the high of that channel. They try to buy the pullback off the moving average. They fail, right? Pretty much the same pattern we talk about every evening on this newsletter. So really at this point, right, besides, again, the potential here for this to go sideways, right, if it does happen to come down and go sideways here tomorrow, you'll know this because it'll sit there for a while overnight. It's the same thing as always, right? It's the 1, it's the 2, it's the buy back up. It's the 1, it's the 2, it's the sell back down, right? We're buying with that 2 try failure below the low. We're selling with that 2 try failure above the high. In my experience, learning how to trade a range-bound market is some of the most difficult stuff to learn, which is why I covered that topic in tremendous detail inside that free trading course, right, as well as, right, linked up below the video tonight on the blog. So Nasdaq is, again, pretty simple and straightforward. Buyers have a lot of potential profit here, but they have to kind of wait and see if they can fend off these bears before things get too crazy to the downside. Over on the gold, the yellow metal, right? Nice, strong, bold move into a range on Friday. And you'll notice they've been pretty much using that range ever since about 9:30 on Friday morning. Now, of course, range-bound markets. The first thing I always do is I find my range. Okay, then I use the amount of the move above the range, called the pendulum swing. I take the amount of the move above the range and I use that to calculate, right, a level of support below the range. So it's a very easy little technique, right? Once you find your range, this is kind of easy because the range was calculated last Friday, right? That was your range from last Friday. Then this morning we break up, right? Amount of the move above, amount of move down, right? That's my key level of support now, right? This little 77 to 76.1 area. So that's my key now, right, is this area of support. Okay, we're a bull market, no doubt about that, right? We're a bull market. I want to be a buyer here. So how do I buy this market on the gold? I want to buy below the range. I want to stay the heck out of the middle. Don't fiddle with your middle. And of course, I've got sell zones here overhead. So what would be some options here for me to be a buyer off of that low, right? How do I buy off that low? Well, let's zoom in here and let's talk about this because I want to make sure I can buy the pullback. I also want to make sure I can buy the breakout here too because we've got some big juicy highs sitting up here, right? I got that high up around 1290, 93.2 high, right? We got some great targets waiting just a few ticks overhead here. So I'd like to find a way to buy this market if it goes higher as well. First of all, though, right, what if it pulls back? If we can get this thing to pull back here for us right now, watch that moving average coming over. Look for those sellers to try to sell off the moving average. Once you see them take the bait, now you know where their stops are. You can buy into their stops and you can buy the pullback as well, right? These are my two favorite setups in a range-bound market. One is going to be a strong potential breakout. The bears try to sell that pullback. I then look to buy into their failure. Okay, then remember, don't chase after it. Don't chase it. Wait for it and buy the pullback from there. All right, guys, those are two very reliable setups, right, as we get that pullback. Now, we've had a lot of really sharp moves lately, right? So what if the market really tanks? Can I still buy it? As long as it doesn't hold that pullback and make that 1, 2, 3 reversal, right? If it just tanks, then what do? We use the nested, the 2 tries, right? The 1, the 2, and the up from there. So if we get just a little lazy move lower here, look for the failure, right, into the pullback and back up in. But again, we've seen a lot of this real knee-jerk, sharp pullbacks. If it really sharp, right, again, it hasn't turned bearish yet. It hasn't held the pullback for the 1, 2, 3 reversal. It's just a sharp pullback. Okay, just like the sellers waited for the buyers to try once, try twice, and then sold it down, right? The buyers now here want to make sure those sellers will try once, try twice, and then buy up from there. Now, what about going higher here? Okay, what were some patterns to use as the market goes higher? There were 2 of them, right? One was the strong move up, and then it was two tries, right? 1, 2, and go. Keep in mind, this is a pretty aggressive setup, so you want to make sure you have a very aggressive breakout, right? Got to be aggressive, and remember, higher highs here, right? The bears should try once. Okay, if they don't reverse it, they'll try it again, not at a lower price, at a higher price. Okay, that's why this is not that pattern, right? If this would have been the move up 1, 2, that would have been the pattern. So strong move up, bears try once. Higher price, bears try twice. Again, make sure they've got that higher high, right? Because that's how you know the bears, the aggressive bears are in and the conservative bears are in. And then again, looking for that nice strong signal, and we're literally buying right into those stops. Okay, what is a little bit more conservative and a lot more reliable is always going to be that 1, 2, 3 breakout. Okay, just like a 1, 2, 3 reversal, a 1, 2, 3 breakout. Strong move up, pull back, and then break through. Once we have that, now mark up that high, mark up that high, find that low, you got it, and we're buying off that pullback. It's a very easy setup. The hard part is the patience, right? The hard part is waiting for it patiently. That's the difficulty with that setup. And then how about being a seller? How could we sell this market, right? Could I sell it as it goes higher? What would be the best way to sell when the market's bullish? Well, it looks just like this. We make a run up. The buyers are going to probably try twice, once, twice, and then drop back down. Now remember, right, you want to make sure you get that lower low. So see how it comes back here, right? They go up, they pull back. Once you get that second try, then the bottom drops out and it collapses, right? So as we go higher here, again, it's not a breakout yet, right? It's not a 1, 2 breakout. We go up. The buyers try to buy once. They try twice. Again, very specific here with those lower lows because those lower lows will tip me off. The aggressive buyers are in. Now the conservative buyers are in. Nice. Now we can sell going all the way back down into that trading range, right? So buyers try once, buyers try twice. We call these what? We call these nested failure patterns. And then what about a market going lower here? How do we turn bearish here? Yeah, same thing, right? 1, 2, 3. Now remember, just because you see a strong move down doesn't mean you can sell that pullback, right? That is exactly the type of failure pattern that we're looking for here tomorrow, right? So remember, if it pulls back off these highs, watch that failure and buy into their failure here. But if we can get that strong move down, if they can hold that pullback to the moving average and jump off it, yeah, okay, now I'm good. Now mark up that low, mark up that low, up to that high, right? And now we're looking to sell off that channel high, right? There we go. Again, we'll use failures, we'll use pullbacks, right? We'll use trap patterns off of that range high or off that hidden channel high there, okay? Don't forget, the target for the sellers is back down to retest these lows, right? Target for the sellers back down to retest those lows. target for those buyers, right? We got some of these lofty highs up here just before we get back to that 1300. So nice, easy job there for the gold. Now all we need is a little bit more information, and we can go forward from there. All right, now, last but not least here, over on the euro. The euro's a relatively easy one. It's a bull market as of Friday, right, into a trading range environment. Now, we talked about this on the gold already, so a lot of this will be repeating myself here, but we know it's bullish. So because it's bullish, I want to focus my energy on buying below that low. In a range-bound market, you want to buy low, sell high, and avoid the middle, right? So we're buying low. We would also think about selling high, but because it's a bull market, we got to be careful about selling high, obviously. Slightly different pattern necessary, and by all means, we've got to stay the heck away from that, right, from that middle. So what's the plan here? The plan is to use that two-try failure, right, to buy off of that low. Same pattern we talk about on gold, right? Let them try to take it lower. Don't buy the first one, because remember, you're going to probably get that second attempt. Once you see that second attempt, now you know where the pain is. Now you know, right, where stops are, and now you can look for that run back up. Or if we go higher, right? If we go higher here, right? How do I buy it as we go higher, right? Strong move up, 1, 2, and go, right? What do we call these? Two-try breakouts. Remember, higher highs, and you're buying into their second attempt. Or it's a 1, 2, 3, go. Find that new channel, mark up those highs, right? And there's my sweet spot right there, right, on that pullback. So those are the two types of buy setups that we're looking for. And again, a lot of this is simply repeating, right, what I talked about already here tonight, but I want to make sure you see it on the chart, because again, we'll be doing this together tomorrow in our trade room, and I want to make sure when I see you there with me tomorrow at 8 o'clock Eastern time, I want to make sure you're ready to go with the right strategy here, ready for it. Now, as we try to go higher, how do I sell this? We go up, we let the buyers try once, we let them try twice, you got it, and we look to sell it back down again. We go up, the buyers try once to buy the pullback, the buyers try a second time to buy the pullback, and what do? We wait for them to fail, right? We're not just going to sell because it's the top of a range. It's too bullish. We have to let those buyers tire themselves out once, twice, and then we can dump it right back down in from there. Now, how do we sell as we go lower here? Trying to be a seller going lower is not going to be as easy as being a buyer going higher, because you've got two things. One is the big round number, which we know on the euro loves the big round numbers right now. And two is that low of day. So, you know, the old story of 1, 2, 3 reversal, that might not be that easy, right? We might be running right into, right, the low of that range. So I don't know. I think you're more likely here right now to see it run lower, and then with that strong bearishness, 1, 2, and then back up, right? Just like if it runs higher, and because momentum is so bullish, I don't want to sell until the buyers try once, try twice, and then back down again. If we see it really run lower, I've got that level of support right there. Not a really great risk-reward ratio on that trade. So instead, I'd rather wait to buy it back up. But first, because that momentum will be so strong, I let them try once, I let them try twice, right? And we go up from there. It'll look very similar we saw back here, right? When they make this big dramatic run down, they try once, they try twice, and then it kind of explodes as it goes higher. Same basic idea, right, as we go lower on this euro. All right, guys? Got everything pretty much planned together here on that euro. The only kind of concern I have is if we go sideways. It's been a relatively quiet session here so far this week. You'll notice we pretty much spent the entire day today inside of that trading range. If it goes sideways, it's a bull bias. It's 1 try, it's 2 try, and we're buying back up, right? If it goes sideways, right, it's strong move up, 1, 2, and go. All right, you guys have the plan. If you want to learn more about all my favorite setups, grab that free trading course linked up in the upper right-hand corner, or grab that big red button here right below the video tonight on our trading blog, right, and join that free course. Everybody loves that free course. The big question I have, though, is will we rebound? Right? Will tomorrow night's newsletter be talking about, oh my goodness, they got one more leg down? Or will we be retesting that gap, right, and those all-time highs from late last week? Boy, tomorrow is another great day of learning and earning opportunities in our trade room. We open up every morning at 8 o'clock Eastern time, and we teach and trade together every morning from 8 o'clock until the closing bell rings in lunch. We do all of this every morning with all of our advanced members. You can learn more about membership right below my ugly mug, that big advanced course button right there. That's how to get registered for tomorrow morning's trading session. If you're not ready for membership yet, I've got a great free pass here right to the left of my ugly mug. Grab that free trial. As part of that free trial, you get the free pass to attend our trade room, the free course to learn more about our favorite setups. Everybody loves the free course, so will you. Grab that free trial. Come see me tomorrow as a guest or as a member. And don't forget, pick up the phone, send me an email, jump on Skype, whatever the easiest way is for you to reach out and get more information. I'm always standing by to answer all your calls, help you answer all your questions, and help you do this the right way. As I mentioned earlier, we all know there is life-changing money to make every day in the financial markets, and my job tonight and tomorrow is to help you go get yours. I hope you see you tomorrow morning in the trade room. If not, I'll see you guys same time, same place tomorrow night on the next edition of our nightly newsletter. So get some rest, right, and follow those rules for tomorrow. As always, my name is Joseph. Be well out there, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.